Welcome, welcome. My name is Relative Rum, and you may or may not have seen me before. I am getting straight into the video. I'm not going to stall. I have limited time right now, and I'm not going to waste y'all's time. I want to cover over some important points here and just try to make this video as concise as possible. So we're taking a look at Nasdaq here first. If you remember, in I think 2 videos ago, I did a forecast on Nasdaq back in April, and I talked about seeing the possibility of a market crash in June or July, similar to 2020. And I also said that if that were to happen, then we may see a large rally ensue afterwards, all the way up to or past 33K, and possibly even 41K and 47K. So there you go. That's the recap. And as you can see, this is the crash. I call it back here. It's right in front of your screen. There's no negating it. Similar to like the one that happened on October 10th here. This crash was even bigger if you measure from the all-time high it created to all the way down of that crashing candle. You see, this is 6.59%. This is 4.77%. But although I did call this, which is important, I still think we are not done, because I remember I said it was supposed to be really big, pretty big, right? Anyways, I'm gonna give, kind of what I see here for the next couple months. Usually a crash like this does last around 2 months or so, so it should continue coming into July. Where can it run to? Well, let's take a look at that right now. I believe we're gonna ultimately head down here. I know that is crazy. It may seem crazy right now, but that's just immediately that it would just make sense for them to run it down here, because it would induce a lot of bearishness. And once it gets down there, I actually don't believe it's going to continue. I believe that it's going to reverse, as I said, to head to the 33 and above. And so I have these levels down here to where I would be looking to buy. And I kind of put like little commentary notes beside them. So you have buy level 1. So to me, that's kind of like safe. That's good. You'd be trading within this fair value gap there. Buy level 2 seems fine. It can clear out the lows in here, relative equal lows. Okay, pretty cool. Buy level 3, okay, that's still fine. It could clear out that low right there, trade into this inefficiency there, and continue. But then starting from that point lower, it's like, okay, don't get any closer, bro. Get away from me. I don't want to see you here. And then here it's basically like, you shall not pass. And if you do pass, then we're not coming back up. It's going to continue lower. But yeah, that's what I'd be looking at. Obviously, before we even get here, we have to focus our attention up here. The first zone of business would be this weekly for value gap there, or weekly inefficiency. If we can slice through that, then I'd be looking for lower to this weekly suspension block, which is where it could fail to get lower if it shows signs of trying to respect it here. And after that, if we can get through this, it may consolidate here a bit. I would look for this quarterly Q2 opening price, see how it can, how it behaves coming into that level, and if it's showing signs of not wanting to stop or anything of that, then yeah, I'd be looking for down here. And then obviously once it gets down here, these would be discount levels to buy from, for it to then continue for the rest of the year, which would be, it'd be crazy. So yeah, that's the commentary for, I guess, a short-term, long-term perspective. I get just these 2 months, so June and July. Obviously we also have relative equal lows in here, and we also have a bearish breaker here, of which I would want to watch and see if we respect this or no, the mean threshold of it. Going down to the 15 minutes, just for tomorrow, just for Monday, this is what I'm seeing here. Actually, let me start off on the 4-hour chart. This is just for tomorrow. So for tomorrow, I'm seeing this. I'm seeing that we are at these lows right now. This is the relative equal lows are marked out on the daily chart, or pointed out to. It's obviously pretty easy to assume and obvious that they're going to run below that. That is easy objective, easy target. But the thing is that retail sees this as a support zone. And so what I would like to see here, or what would make the most sense here for Monday, everybody is expecting a bounce on Monday. If you look on X, everybody's talking about, oh, after a bad Friday, usually Monday is actually a bounce. Yeah, I think that's propaganda. Anyways, everybody's expecting Monday to go up, and it can go up, but it's only to induce bullish sentiment, especially because it's at a quote-unquote support zone. But all it would be doing is coming up to induce bullish sentiment, trade into the mean threshold of the daily bearish breaker. But before it even gets there, I believe it's going to consolidate here, because that would make the most sense, because this would be the Asian range, forming the floats for both sides of the consolidation range for liquidity purposes to be used on Monday. And then since Monday is usually the day used for retail traps, this would make the most sense as well, because it would run above, induce bullish sentiment there, because it's breaking out to the upside. So people, breakout traders, see that as bullish and chase the momentum. But all it's doing is trading up into a premium daily higher time frame array right there, using the mean threshold, and also making it seem like this support zone here is working. And also at the same time, this works as a bear flag, but instead of working initially, it's gonna do a fake out first, so that way anybody who wants to use this as a bear flag gets destroyed here. And then if you look closely here on the 15-minute chart, we do have some relative equal highs up there. And if I go down to the 1-minute chart, you can see those pretty easily. That is way too thick though. Okay, there we go. So there's going to be buy side liquidity there. So we can run that on Monday during London session. And then this would also seem, this would also be accumulation. You have accumulation here, then you have manipulation, and then you have distribution. And also you would also have a market maker sell model. And so this accomplishes everything that's perfect for the algorithm, basically. This would accomplish a lot of things for smart money. And it's very high probability, in my opinion. Does that mean it's going to do it? No, we don't know if it's going to do it. We never know what's going to happen. But if we assume that the algorithm does exist, this is the most reasonable thing to happen. The turning point here would be, we have a high created, around 3 a.m. And then we can either not run it, or we may run it during the 7 a.m. hour or 8 a.m. hour pre-market tomorrow, Monday morning. And then we would drop down below these lows, taking out retail who thinks this is support and they're buying there and placing their stop losses below those lows. If I can find there we go. So people would be buying here and their stop loss would be here, and everybody would be looking for all-time highs, right? But no, that's not what's going to happen. And oh yeah, on the 15-minute chart, I think I already mentioned this, it would be trading up into this PD array right there, the mean threshold of the daily bearish breaker. So it would consolidate around that level. And then in the lower time frames, obviously you would look for stop runs higher, so taking out buy side, and then showing displacement, and you get the the waterfall. So there's my commentary for Nasdaq. There you go. I called Nasdaq. Now, in my previous video, I was also talking about dollar index. You can see that come into fruition as well, where I said I was looking for higher to round out the highs here, and then ultimately trade into this there, and or the Reaper, the monthly Reaper here, to which then we would see a reversal to the downside, because long term I am still bearish on dollar index, and so you can see this being coming to fruition, and obviously I'm still looking for that. Just keep looking for higher here, June and July, and yeah, that'd be commentary on that. Nothing has changed there. July, I think we will have another events happen which will cause these turning points in the market, these major turning points. So yeah, that's dollar index. Same thing with euro dollar, just reversed. I pointed out these relative equal lows right there. I pointed out this order block, but alas, we consolidated here. But all we did was just trade up into this fair value gap there, and then nosedive lower. I would be looking for this low to be traded to, then this one, and then this one for relative equal lows. And yeah, that's my commentary on euro dollar. We also took a look at vaccine stocks. So here for Moderna, I believe we have created a consolidation range here, which I believe to be accumulation. It's possible that we do get a move below these relative equal lows, and I would not want to see price breaking below this low, or this fair value gap as well. If we do come down there, I want to see this fair value gap respected, have no bodies above, below the consequent encroachment. You do want to see them above, and even better if they're right at the high of it. And that's my commentary for Moderna. I believe, again, as I said in that quick brief look at Moderna in the video I made, that I'm looking for higher. I believe we're having expansion higher here. I don't think I gave any targets for where it could go. Ultimately, I am looking for all-time high or near to all-time high, but before we can even get there, I believe that we may have a temporary pause at this bearish monthly order block. So this would be the first target to look at, and if we can get past that, then obviously we would look at the bodies here, and then the candlestick consequent encroachment there, wick, and then the buy stops above here. Then we will want to see animation to here and see if we can get up here. So that's that. Next up is Novavax. Again, same thing. I believe we have created a range here as well. Basically, you would be looking to buy down here and looking to sell up here. But since we are expecting, or I am expecting, a move higher, which is likely to occur in July, like the run higher and expansion higher is probably going to occur in July. As I've said, there's going to be an event in July, or at least that's what I believe. But you would be looking to accumulate in this discount zone. Well, for Moderna, you may want to be a little bit more careful because it may drop. But for Novavax, I am more confident in this staying within the range, and it'd be fine to accumulate or look for long positions here. For now, since the stock market is dropping, it could be possible we run below this low and trade into this zone here, right there. So that would be kind of like a volume imbalance. Though I'm pretty sure for a volume imbalance to be considered that way, I'm pretty sure these wicks have to share the same space. But it's okay. It's almost the same thing. We're looking at almost the same thing here. It's just a discount area or price points where you would be looking to buy. And yeah, and then you would want to see movement higher. If you can get a close above this consequent encroachment or this consequent encroachment, then that's good for seeing price expand higher. And then I'm looking initially for this high to be ran through, and if we can get that, then look at this inefficiency. So if you can rip through it, I want to see bodies get above the consequent encroachment of this, and then from there we can look for the consequent encroachment of this candlestick's wick, then above this high, and ultimately all-time highs. So that's what we'll be looking for. These are all relative equal. That doesn't mean it's gonna have to run through them, but it is a strong draw in my opinion. And so that's my commentary on Novavax and the vaccine stocks. Now for Bitcoin, I will admit I was wrong for Bitcoin, but to be honest, I'm actually consistently wrong with my Bitcoin calls, and I own that. So I said we're gonna go higher here. We ended up going lower, and I think the reason I'm often wrong with where Bitcoin is going is simply because I don't really understand it. At one point, I thought I did understand it, but I actually don't. I don't understand Bitcoin. But don't worry, because I've actually started to do a bunch more research on it and trying to understand just like what it really is. Because there's like so many questions that come up with it. It's like, what is Bitcoin? What does it do? What is its purpose? Like, what function does it have in relation to like the charts and the economy? What correlations does it have, and what valid correlations does it have to other markets, and why? And also other weird questions like why, like what happens if Satoshi Nakamoto is alive and he moves Bitcoins? Like all of these questions pop up. Like there's too many questions, and there's too many factors that go into Bitcoin, and I'm doing research on it, and I feel I have done the research already, but I'm still I'm synthesizing everything, but I feel like I've understood a bit more of what this asset could possibly represent and how it works. Well, for now, from what I understand now, I believe we are going to drop lower to around the 47K level, so past this. Though if you're looking for a long-term position on Bitcoin, below that low would be good spots to buy at, and consequent encroachment of this wick would be a good spot to buy as well, and even better if it gets below that liquidity there. I don't believe it's going to get down here. ICT is pointing out these relatively good lows. It's not going to get down there. It's just not. It's not going to get down there. I know it makes sense, but that's overzealous. He also calls for 0. He calls for 0 as a target. I think it could get there at one point. I'm not going to disagree on that, but it's gonna. I don't know when that will be. For now, I don't see that happening right now. But yeah, ultimately, Bitcoin may go to 0, and that's it. So anyways, I think I've covered everything I wanted to cover. Let me just take a glance to see if that was everything. Oh, for Nasdaq, I don't know if I mentioned this in the last video where I talked about this crash, but I said, or if I hadn't said, I'm going to mention it now. I mentioned, okay, I know this for a fact. I mentioned that we may see a 2000 style bubble pop in this market. And I think I've mentioned it was going to happen in 2027. But what I don't think I mentioned is that if we were to see this crash happen in June and July, that comes all the way down here aggressively, I believe that instead of the AI bubble pop happening in 2027 or whatever it is, just as long as it seems like the 2000 bubble pop or 2008, since this is happening, I believe it won't happen in 2027 anymore, and it's going to happen in 2028, which is actually when I initially saw this could occur, but then I revised it to being in 2027 based on what I was seeing back here at that time. But you get more info as time goes on, and so I'm reverting back to my original call of 2028 being the 2000 style bubble pop, and this is not even like we're early Like this seems like it could be the bubble pop, but it's not. This is actually like the precursor to it. And this massive rally is actually going to be shadowed by an even bigger rally coming into 2028. As I said, 33K, 41K, 47K. So, hope you enjoyed the video. I kept that as concise as possible, and I hope you kept up, and you may or may not see me after. Bye-bye.